Today we're going to be starting the first ever video of our monthly investment series, where I'll be displaying my entire 6-figure investment portfolio. So if you're into personal finance or want to get into investing, you're in the right place, so stay tuned in. Hey everyone, it's Jimmy here. Welcome back to the channel. Before we dive into the specifics, I wanted to quickly start off by letting you know how I got introduced to the world of investing. My first investment was purchasing TD mutual funds, which the advisor at the bank had suggested to me back in 2017. And for about a year to a year and a half, I was auto depositing $50 per month into this mutual fund. Now I have a business background, and in the middle of my undergraduate degree, I started learning about finance and was interested in purchasing stocks. So as anyone would when they first get into investing, I was looking at stock prices from the 2000s for the companies that I knew so well, like Starbucks, Apple, and Nike, and thought to myself picking stocks would be so easy. So I sold all my mutual funds and opened up a tax-free savings account with TD Bank. My first stocks I purchased were Amazon, Spotify, and Coke. And now I purchased Amazon and Spotify because I used these companies frequently back in 2018. But here's the kicker. My rationale for purchasing Coke was because one of my friends had suggested Coke was a safe company, which does well even in recessions. And guess what? I purchased the wrong company. I purchased Coca-Cola Consolidated Incorporated, an independent company who handles Coke products, instead of the actual Coca-Cola company. This shows how inexperienced I was at the time, but also hopefully it shows all of you that we all start from somewhere. Okay, now let's get into what you all been waiting for. So my investment portfolio consists of two major segments, stocks and real estate, but I'll only be discussing my stocks in this video. I have investment accounts at 3 brokerages, Questrade, Wealthsimple, and Interactive Brokers. Each account you're about to see shortly have different types of allocations related to my investment objectives. So first off, I just want to let you know that I am using Passiv. Passiv is a great tool if you want to see an overview of all your stocks and ETFs at different brokerages. I will leave a link in the description below if you want to check out more. As you can see, on Passiv, you can set target allocations of what you want to be invested in. So here I set an allocation of 40 and 60%. So here I put 40% into VCE, which is Vanguard's Canada Index ETF. And here I put 60% into Vanguard's Canadian High Dividend Yield Index ETF. And if we flip the tab over here, you can see that it shows the amounts we have allocated in each. So I have 86 units of VDY and then 53 units of VCE. So with my margin account, what I do is I auto deposit $100 per week into this account. This account I basically use as an emergency fund, although instead of having cash sitting in a savings account, I do have a higher risk tolerance and feel comfortable putting in my money into Canadian investments. I feel like the Canadian market does have strong, reliable companies such as the financial sector and the energy sector, so I don't really have any worries of having my money sitting in these investments. So like I said before, I first opened my TFSA with TD Bank, but I eventually transferred over my account to Questrade since it offered me better value, such as free commissions for ETF purchases and less management fees. There are many benefits of using your TFSA, which I will go in depth in further in another video, but I know some people are not using it to its full potential. So hopefully with these videos that you'll see the numerous benefits TFSAs have. Alright, so now on to my allocations on my TFSA. First off, I just want to say my allocations have changed since I opened the account, which I do consider normal since you are learning about the stock market and about all your investment options. But sticking to a certain strategy should be key for you guys. So figure out what you want to invest in and try not to keep changing your strategy, as you'll just end up buying at stocks at their highs and then selling them at their lows. Alright, so I hold 5% in real estate. This consists of ETFs for real estate investment trusts. These products hold real estate in commercial, industrial, and residential land. Then I hold 17% in dividend growth ETFs, which basically is the Vanguard's Dividend Appreciation Fund. The purpose of the funds is basically to track the performance of the companies in the United States which are growing their dividends. I hold both hedged and unhedged versions of these ETFs, but more so the hedged version due to my current bias of the United States and Canadian dollar exchange rate. I then have 25% in the S&P 500 index, and now this is split more 50-50 with hedged and unhedged ETFs. As I mentioned in my previous video, I purchased a lot of VFE back in 2020 and 2021, but right now I'm just focused on purchasing VSP. I also have 10% in the United States stock market, which provides investors with exposure to the entire US equity market. Lastly, I hold 43% in a technology ETF offered by TD Bank and a NASDAQ 100 ETF. So you can probably tell that I'm more heavy in the tech sector. However, due to my investing horizon and my risk tolerance, I do feel comfortable with putting a majority of my holdings in the tech sector, which is more volatile and known for their up and downs in the market. Please feel free to comment below if you'd like to discuss my allocations or to offer any advice. I would love hearing from you guys. Also, you can probably tell by my investing strategy in my TFSA that I'm just investing in ETFs. As I mentioned before, I have separate accounts for different investment objectives. So with my TFSA, I want to take a more passive approach and ride the market through its ups and downs. I believe it's best for beginners to also get into the ETF buying approach. while you're just starting out in the stock market, because you're just learning about the market and also what you want to achieve. So you'll also learn about your risk tolerance and what you're comfortable with. The last thing is, in my TFSA, besides the REITs I hold, it's all US focused. I know some people are biased to holding Canadian companies, but history has shown that the US market has outperformed the Canadian market. But again, I also hold Canadian focused ETFs in my non-registered accounts, as I just showed previously. So I do have exposures to both markets, but I am exposed more to the US. Alright, now we have my registered retirement savings plan. So this account, to be 100% honest with you guys, I opened it because Questrade was offering a promo at the time where if you opened an RRSP and funded with $1,000, you get a $100 promotional rebate. So me being me, I thought, you know what, it's a 10% return right there just for my $1,000 investment. So I might as well just open up an RRSP with them. So RRSP is definitely useful, but for me personally, I don't invest much into it because I do have a retirement savings plan with my employer, which both my employer and I both contribute every paycheck. But for the small amounts of investments I do hold in my RRSP, I only hold US listed securities. This is because it's more beneficial due to not having to pay the 15% withholding tax on dividend income due to the treaty with Canada and the US. I'll discuss this more in a future video if you don't know what I'm talking about. One last thing I want to show you on the Passiv website is instead of making graphs and charts of your investment totals, percentages, and dividends, Passiv automatically does that for you. So on this page, I can see my total contribution amounts, my performance, but the most important thing I do look at here is my dividend tracker. You can see the dividend tracker is a great visual tool and shows me my dividends throughout the whole year. Now here we have the actual Questrade website just to show you the overall of my total account value in Questrade since I opened my first account back in 2019. This is something you want to see, right? Uphill graph increasing over months and months of investing. Alright, so now we have my two accounts at Wealthsimple. The first one is the first time home savings account, which is a new account introduced by the Canadian government in 2023 to help first time home buyers save for their first home. There are many videos online explaining the FHSA, so I'm not going too much detail, but basically you get tax deductions on your limited contribution amounts, and then you're able to withdraw the amounts you earned in the account tax-free. So in this account, I have two holdings. The first one is VDY, which I discussed earlier, that I hold in my non-registered account at Questrade, and the other one is Cash.to, which is offered by Horizons ETFs. So with this Cash ETF, it basically holds GICs from different bank institutions, and then the income earned from the GICs are distributed to you. So this is entirely an income ETF play. There is basically no capital appreciation for this underlying security. The reason why I like Cash ETF is because I do not have a set time frame of when I want to buy my first home. So if an opportunity comes along the way and I need money for a down payment, my investments in Cash ETF will be there, plus the interest I accrued. However, for example, let's say if I purchased an equity ETF and the market went down, then I would have to sell that equity for a loss and have less money for my down payment. Therefore, for this account, I'm taking more of a cautious approach. Now here I have my investment account for the CDR challenge that I mentioned in my last video. This account just holds CDRs of US companies. We have about 5 to 6 companies right now. The account at this time is pretty small, but it's something I'll be contributing to weekly. So as of right now, the cash is just accumulating, but if we do see an opportunity in the market, we'll put our money there. Now we have my Interactive Brokers account, where I focus more on individual companies rather than ETFs. So in this account, there are two strategies that I use. The first one is just purchasing shares of US listed companies, and the second one is selling option contracts. This is a screen recording of my holdings at the end of December, when I originally intended to post this video. As you can see, I hold shares of Meta and Pepsi. Also, there's a call option for Meta which I had sold for some premium. Option selling is more of an advanced strategy, so I will be going over that in another video, so stay tuned. Also for this account, I do take a more technical analysis approach when purchasing shares instead of a fundamental analysis. As you can see, Meta shares are priced at $3.49. I eventually sold all my Meta shares a couple days later at $3.53. And now, about 1 month later, after Meta has released their earnings, it's trading for $100 more. So yes, I was punching the air for about 30 minutes when I saw how much Meta went up. But you know what, I can't be too upset because I did take profit at a point where I was happy. So there's no point in looking back at how much you could have made, even though it does sting a little bit. But the stock market is not going anywhere, so there will be more opportunities and more money to be made. And there you have it. I just revealed my $135,654 portfolio. I wanted to end off the video by saying I believe self-directed investing is important if you want to be on top of your finances. Learning to invest by yourself is something that might take some time, but it's definitely worthwhile. I recommend putting at least 20 to 30 hours to learn all the beginner's basics. There are a lot of free resources out there, so don't get overwhelmed with the idea of self-directed investing. Remember, everyone's financial journey is unique, and what works for me might not be suitable for everyone. Lastly, for anything you want to do in life, it's always better to start now than later. It's all about getting the ball rolling. Even if you start off by doing small little things, it will eventually add up. So please stay consistent with it. And yes, you may end up making some mistakes along the way, but mistakes are part of life and it's something you can learn from, which will help you in your future endeavors. If you have any questions or want to share your own investment journey, feel free to drop a comment below. And if you found this video helpful or interesting, don't forget to give it a thumbs up and subscribe for more content on personal finance and investing. And stay tuned in for more upcoming videos, where I go more in detail about my holdings and strategies. Thanks for joining me today. I appreciate you all. Until next time, stay locked in.